Just look at how massive the Federal Reserve's balance sheet is. We're being told that the balance sheet is on its way to, quote, normalization, but at its current pace, it would probably be the year 3000 before we get to that point. One issue that's not being considered is that if the dollar continues to remain strong, and potentially even more so, who will buy up the debt that the Fed is selling off? Well, you came here for the truth, so let me unveil that for you. Today we're going to look at the US dollar, we'll look at the Federal Reserve and other central bank balance sheets. Then I want to cover more information, so stay tuned, a jam-packed episode for you. Let's begin with this. You are looking at the Federal Reserve Bank balance sheet, and what you can see is that it has been declining. But if you look closer, you will see that percentage-wise, it's actually quite small. Where it had moved from and where it is today is really not that significant. But the trend is down. And if it continues on this trajectory, and hopefully will go at a more reasonable pace, this is a little bit ridiculous. But if so, that presents us with an issue. And I will show you the next chart. What you are looking at is the trade-weighted US dollar index. Over the years, the US dollar has been quite strong. Although it has declined in more recent times, since the low levels that were experienced back in 2008, back in 2011, clearly we see that it has risen. And so the issue is this. Countries around the world buy up US dollar denominated debt. This helps the US to continue to consume. You see Japan, China, and others buying large amounts of US debt. But as the US dollar becomes more expensive relative to their currencies, then maybe it's not such a good idea to buy US debt at this time. Maybe we'll just let all of that other stuff roll off, and then maybe we'll buy some euro. Maybe we'll buy some of this emerging market, or maybe some German, maybe some, other areas. That's what happens. So you have the lender of last resort, the Federal Reserve, who has bought about $4.5 trillion worth, plus the $16 trillion they won't tell anybody about that was found in the audit. And all of this together being essentially purchased, held on to. Then they say, we're going to sell off. They start the pace very slowly, selling it all off, and hope that the market will come in to buy it all up. If we are to believe their words, that they say, we're doing this, this is what's happening, and they actually then do it, who in their right mind is going to buy this garbage? The Fed bought it all up knowing there would be no way for the market to absorb $4.5 trillion worth. But here we are, seeing it before our very eyes. There is only one solution, and that is hyperinflation. Eventually, the Federal Reserve will have to hyperinflate the currency, or at least to very high levels of inflation. You can see that this wouldn't be the first time. Many of you know the central banks or the governments, I should say, previously in the US had done this twice before. All right. Globally, all central banks have been printing at different rates and buying different things. Some are buying the garbage debt, some buying the toxic assets, some buying the ETFs, others buying stocks and other foreign governments. You have other central banks doing all kinds of funny things. But ultimately, they're holding on to massive quantities of, different, I don't want to call them assets, but they're holding on to different, what they see as an investment, holding it there and awaiting a time when they feel is right where they could sell it back into the market. There hasn't been that time yet, and you can see for yourself. The Federal Reserve has been just slightly reducing in their balance sheet. But the Bank of Japan, the ECB, Bank of Switzerland, all of them, they've all been increasing the pace or continuing to purchase, and that has by far made up for the reduction in the US balance sheets, the federal balance sheets that have been, as I've said, this fraction of reduction. Okay. All of this now, again, you have all of them doing this. At the same time, we have an issue here. There's no possible way that they can get away with this. Nobody's going to be there to buy up this debt, these ETFs, these bonds, these stocks. It's just not possible. Now, many people would say, well, then they won't do it. But you can only hold on to this for so long, print so much currency without it having a negative impact. We have already seen the negative impact of that. For example, real estate prices becoming impossible for individuals to buy. You see the gap in between the rich and the poor. You can see that the different asset prices have been dramatically inflated. You can see food inflation, energy inflation that has been going on today. And if you keep printing and printing and printing and printing, that only gets worse. More people end up on the streets. But you don't see that connection if you're not paying attention, if you don't put the puzzle pieces together. But many people don't like that. They like to be spoon-fed. Whatever CNN tells them to do, whatever Jim Cramer tells them to do, they're going to do it. They go to these different websites out there and they look at the trade calls that are happening. They buy the trades, they buy into it, and if they're successful, they'll continue. They'll continue and they'll continue. But ultimately, it comes to bite them in the behind. If you found this video informative, please give me a thumbs up. And of course, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books at Amazon. There are links in the description below. Take care.